Hi, my name's Phil. I like talking about politics, and in this video I like to discuss the continuing momentum of post-Brexit movement of both assets and staff from the UK to the EU in the financial sector, with some workers being told, well, you can reapply for your old jobs with a 25% pay cut. But also how, as bad as this looks for financial services, it's only actually bad for us as a country, or for the workers in the sector, not for the industry itself. But first, if you'd like to be notified of daily news and politics, please subscribe to the channel and click the bell notification icon. So it looks like the financial sector has lost its previous and quite baffling belief that Boris Johnson wouldn't sacrifice financial services on the altar of Brexit, and are increasingly doing what some within their industry have been doing for a while now, shifting more staff, assets and officers away from Britain. Deutsche Bank has been reported to be making a quarter of its London bankers redundant and rehiring in offices in Ireland and Germany. And according to someone involved, they've been told that any of those being made redundant that can work in the EU, they're allowed to apply for their old jobs in the new office, but at a 25% pay cut, which paints a worrying picture in itself. Not just the fire and rehire, because although I use the term, when the job is moving to a completely different country, it technically isn't fire and rehire in the sense that many British workers have been facing recently. Now, the comment about if you're allowed to work in the EU, because that is what is going to be especially worrying for British bankers. These operations are moving to the EU. And they're moving to the EU because UK-based operators can no longer sell most of their services to other European countries unless they have EU-based offices. The EU have been ruthless in using their leverage here, made all the easier because Boris Johnson put no effort into agreeing a deal for services, the part of our economy which enjoyed the healthiest balance of trade. They have actively encouraged banks to set up offices in the EU if they wish to continue trading. Now, when warned about this happening, Boris Johnson and his cronies simply expressed the hope, nay expectation, that the EU would do us a solid and just grant equivalence for our financial services. This would have been an eyebrow-raising concept under any circumstances. The idea that a protectionist trade bloc would do favours for a non-member without getting anything in return is not how you build up a successful trade bloc. But against a background of failing to even comply with our own legal obligations to the EU, the idea that the EU would do us any favours at all, let alone ones worth so much money, was mind-bendingly ridiculous. And yet supposedly intelligent bankers believe this. Some of them anyway. But the penny has been dropping over the past half year, and more are leaving London. Although I say that as if major banks have been losers in Brexit. This is not really the case. In many ways, it seems odd that the deal we struck with the EU, albeit weak, did cover trading goods, and yet our production industries are paying a heavy price as a result of Brexit. But for financial service operators, yes, jobs and assets have left the UK. And that's not great for us as a country or economy, but the actual banks are fine, because they still get to conduct all the trade they did beforehand. They've got all their customers. They just had to set up an office somewhere else to do it, that's all. And that is something that a large bank handling hundreds of billions of dollars worth of business can easily do. The problem for other traders, smaller traders in this country, is the government are telling them, if you want to carry on trading with the EU, no problem, you can easily do that. Just set up an office and a warehouse in the EU. And it's like, well, first of all, you're encouraging us to move jobs to the EU. But second of all, I can't afford to do that. My small business can't afford to do that. And there is the problem. But a bank, yeah, of course it can. Easy. Not even difficult. Not even a financial hit for them. In fact, I've seen reports of it working out quite nicely in some cases. London's a metropolis, has huge living expenses. By shifting offices and staff to smaller cities where the costs are lower, they can eventually offset their relocation expenses with lower rents and wages. Like I said at the start, Deutsche Bank seem to be expecting to get the same quality of staff for 25% less with these moves. They're saying to their own staff, Yeah, we're perfectly happy for you to have this role. If you're allowed to work in Dublin, for example, no problem. But you're going to have to take a 25% pay cut. Large banks will always find a way to make money in any political or economic upheaval, as long as they avoid employing people like Nick Leeson, I guess. Or at least keep a close eye on them if they do. All that Brexit has really caused is for the banks to move just what operations they needed to in order to carry on trading with their European customers, while still being able to retain British and non-European customers. In fact, some of them may even approve of the situation. After all, Boris Johnson has made Brexit all about deregulating the financial markets. Well, the banking bosses don't mind that at all. It would be a concern if it cut them out of important markets like the EU, for example. But every time something the UK government does cuts them out of business elsewhere, they know they can just shift their operations. It is no great hassle for such wealthy businesses and can even come with expense savings at times. The losers are the people working in the industry in the UK. The reverse is sort of true, of course. Where an EU-based bank wants to retain British customers, well, it also has to set up an office in the UK, and that will need local staff. But it's a net loss to the UK because we've lost European business. Some banks in Europe have lost British business. Well, Europe's a lot bigger than Britain. A few offices have been set up in Britain and a lot more reduced in size or closed down completely. It's a net loss of British jobs in banking. Of the roughly £22 trillion worth of assets held in the UK by banks, or before Brexit, 1 trillion at least has already left. And reports keep saying that it's likely to be much more. Of course, that still means the bulk remains. But like with everything else, it's a net loss. And that translates to a net loss of jobs. And we're going to see a net loss of jobs from fishing, from farming, from hospitality, tourism, manufacturing, banking at least. Those are just the sectors of our economy that have reported very clear net losses. And what do we have to balance it? Which industry is gaining? I mean, customs inspectors or people interested in working in such a career, they could be fine, unless you're in Northern Ireland where the DUP are blocking your recruitment. With the massive shortage of British lorry drivers, which I'll inevitably need to get back onto this summer when it really bites, could be argued if you fancy training, then jobs will be plentiful there until driverless lorries destroys your career, that is, which potentially explains the lack of young people training to drive lorries these days. But that's it really. Brexit supporters in their desperation keep talking about new jobs coming to an area as if it's justification for the dumbest decision they'll ever make in their lives. Like the new Nissan plant, what's it, producing batteries for electric cars. Yeah, that's going to create some jobs if it goes through. But those jobs aren't a result of Brexit. We were going to have those jobs anyway, in addition to the jobs we wouldn't have lost if we hadn't left the EU. But now we get those jobs, but lose many more as factories close down. And what about those batteries? Not as lucrative for Nissan if they can't sell their cars as cheaply in the EU due to falling foul of rules of origin, so tariffs on them. I mean, a venture that's not as lucrative won't be on as large a scale and so will employ fewer people than it might otherwise have done so. But I still can't help but marvel at how every single sector of our goods trading economy, which got something from the deal with the EU, like as far as financial services are concerned, we got a no-deal Brexit. As far as manufacturing is concerned, we got a weak deal Brexit. They got something, but it's still facing major headaches as a direct result of Brexit. Whether paperwork, registration fees, checks, extra VAT, import tariffs, more expensive transport, or just finding that their goods can't be sold in the EU anymore at all. But when the service sector got nothing, they got a no-deal Brexit, and the financial sector has been treated particularly ruthlessly by the EU, the sector is fine. The banks are fine. Not the people working in that sector, of course, they're buggered. But the industry itself is uniquely placed to cope. It won't create as many jobs here and it won't generate as much in tax receipts. We will lose out with lower employment and less public services. But that's Brexit for you. Makes no sense on any level. But those are my thoughts. Let me know yours in the comments below. Hope you found the video interesting. If you did, don't forget to click the like button. If you'd like to support the channel further, please also click the Patreon link for details. And until next time, I'll see you later.